Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. In today's lesson, I want to go into what I think becomes a little bit more applicable in today's environment, which is, bear market levels for a lot of individual stocks, obviously in the overall market as well. I tend to shift up a time frame, and that means the quarterly chart is the next man up. So if you break on a daily chart and you break the trend on a weekly chart and you break the trend on a monthly chart, then the next time frame up is quarterly. So let's go ahead and get into this agenda. I want to talk about the importance of the quarterly time frame when we get into a bear market. I had a specific request from someone on this. All the different time frames, if you have an understanding of how the nature of the market is fractal, meaning you can continue to divide it up and see a lot of the same type of patterns develop over and over and over again, you can also expand the time frames and see the same thing. I've told you in the past the 18 MA is incredibly important to me, and I'll show you on some of these charts why the 18 MA on the quarterly chart is fairly valuable. And then when we're done with that, we're going to go through all the individual stocks requests that came through. Let's go ahead and look at the charts with a slightly different look to them. I've got a chart of the S&P 500 up, and it's a monthly. Okay, I wanted to start with a monthly just so you know. We look at this time frame. This is typically the longest term time frame that I'm going to spend time on. And the reason is that I can use it in conjunction with the weekly chart, and I can get a really good feel for when an important move that could last anywhere from 6 months up to 2 years, something like that, even longer potentially, can develop. And I'm using the monthly trend and the weekly to help with the timing. But there are times when we break the 18-month line here. You see how this 18-month has not only been broken, but now it's flattening out. And we've clearly gotten below it. When that happens, I typically like to go down to the next higher time frame or go up to the next higher time frame and look at where the 18 is on that next time frame. Now, we are hitting the 40-month moving average. You see this blue line, that's the 40. And I'm not saying that that's not important. I think it's trying to provide support right now. But typically when I'm going through and looking at individual stocks, I lean on the 18 more than the 40, generally speaking, when I'm looking at trends. And when we get through one time frame's 18, I like to look at where the next time frame's 18 is to give me a feel for what kind of risk that we really have. So what I'm doing here now is I've got the monthly chart on the right and the quarterly chart on the left. Okay, and I've got several years going back, and because I wanted to show where in 2020, when we just went slicing through this 18 and even slicing through this 40, notice how we found support at these rising moving averages. Look at how that is a rising 18 and a rising 40, and they look almost parallel, and found a tremendous amount of support. Now, when this is going down like this, if this is your highest time frame, this is pretty scary. It looks like things are falling apart at this point. And yet, if you go up one more time frame, I think it can give you a lot more confidence as to where support comes in. Notice how in 2018, when we had this pullback, slicing through the 18 again, it did find support at the 40, but notice how it really just came and springboarded off the 18 at that point too. And then you can also see back in 2015-16, when we went through a longer consolidation phase, we went up and kind of failed at the 18, and then it went back down, found some support at the 40. But again, this was looking so much more attractive. You can see how this was finding, in the 18 on the quarterly time frame was really providing a nice level of support underneath. If we let's just look at a couple stocks. We might as well take a look at Apple. This gives you a totally different feel. Do you see look at how every single time we've pulled back to the quarterly line, going back, Let me just do this so you can see a little bit better. So look at how the 18 is on the quarterly chart is rising. And it even started way back here early on in the trend and found support at the rising quarterly line, quarterly 18. And then again here, and then again here, and then again here. And then look at what happened really over the last 5-6 years. It's just jetted away from the quarterly line. This is where there's a lot of, and I've said a lot of times, a lot of these big cap tech stocks have a lot more risk right now than they have in quite some time because they jetted away from their quarterly line. They had actually jetted away from their monthly line. But the fact that this is starting to break the monthly just tells me that this process could take longer. Now, it doesn't mean that the stock has to go down, okay? But it's probably going to spend time consolidating this time because it needs to let this catch up at this point after getting so stretched away. Now, I just want to pull up a couple more examples. We can look at something like American Express. Again, notice how this has gotten a little further away from the 18, quarterly 18, and it still has a little bit of room, but there should be a lot of support at 125 or something like that. Look at a stock like Cisco, and we've broken the 18-month line, okay, on the monthly, right? But on the quarterly, we're coming down and we're kind of overrunning the quarterly as well. What bothers me is to look at the quarter. Look at how ugly of a quarter this is. That is just a huge red bar on the quarterly chart after re-entering the breakout level. The other thing I thought I'd mention is notice how when this pulled back to the 18 on this time frame, and we had rising moving averages, right? Good momentum characteristics before the pullback. And then look at the zero line reversal on the monthly, low ADX. So these patterns continue to develop no matter what time frames you're looking at. The quarterly and the monthly aren't a perfect match because they're a little bit too close together. But in terms of using the 18s, I think they can be pretty valuable. Just to give you a couple more examples though, look at Disney. So Disney pulled back and broke the 18 and it broke the 40, but look at how it knifed through the quarterly 18 MA line. I mean, that tells me that this is going to take a very, very long time to turn around. It's just not something that's going to be quick. You did too much damage here. We want to find the stocks in their bear markets that are finding support at their quarterly 18, not the ones that have completely obliterated them. This should take a while. Now, it might not have a lot more downside. We're coming into some pretty big support, but it's going to take a long time to turn things around. You look at something like Goldman Sachs, it still has some room, but somewhere around 245, 250 is probably where next support comes in. That's the quarterly MA. The fact that we've broken the monthly chart means that this is going to take a long time to consolidate. It's not going to turn on a dime and V-bottom like we've seen in other market environments, going back 2018, 2020. But I think this can be a pretty nice and helpful tool when you have a break of the 18 MA. Go on a monthly chart, go to the next time frame, which would be the quarterly. Look at Merck, though. Merck is pretty impressive. Found support. Look at how many times this keeps finding support at the quarterly 18. So every time it looked like it was breaking the monthly line, and it did that a few times, it actually came right back down to this level. So it's just a good thing to keep an eye on, especially in this type of environment. I mean, look at how violent this decline is in Nike. We've got an 18-month that's rolled over. We're coming into this quarterly line, but the velocity of that drop tells me that, yeah, there might be some support here, but it was just too harsh in the way that it's coming in. This is a great way to view things right now. I think expanding out and giving yourself an idea of how much risk a stock has, how strong is the bigger trend. This is a really strong big trend in UNH, but look at how far away this is from the quarterly line. So typically I'm doing this on a monthly chart, but when we get into bear markets and we're looking at really big mega trends, we want to know where we are in the really big, huge trend, the mega trend. And there's definitely some risk in this if we see any more signs of weakness in this. Now, as long as this stays above a rising 18-month, it's not a big problem. But the moment this line starts to roll, we start to break through, then you want to see how much risk you have in the next higher time frame. So I thought this would be a useful tool. and something that I think can be that you can use over the course of the next few months as we're watching stocks hopefully start to bottom in here. But we'll get into that as we go into the individual names right now. Briefly, my services can be found at rabilstockresearch.com. I send out about 2 to 3 reports each week, plus a special video for the individual package. If you have an interest in giving it a try, you can use the coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the stocks now. So just to finish up, I've got the quarterly chart here in the bottom left still, and you can see the S&P pulling back towards its quarterly MA, this 18 MA, which is 3,400 right now. But just remember, in another week, this line's going to go up more because we're going to flip over into a new quarter. So I would think there's probably pretty decent support somewhere around the 3,500 region. Especially, we're trying to mount a little bit of a rally here. If we, if we can maybe rally between here and the end of the month potentially, maybe we come down one more time and see some volume. I'm waiting for signs of real volume and climax, at least in the near term, and to find some kind of interim low to be made. So that's kind of what I'm watching for. I just thought I'd bring you up to speed just based on the fact that I had that line up. So let me put this back into a monthly chart, and let's start going through the symbols. So I did want to cover Bitcoin, and then I'm going to cover a couple of commodity things, and then we're going to go into the requests that came through. So Bitcoin has made, it's sort of completed a topping pattern. If we look at this weekly chart, we can see we've basically taken out this 30,000 level, and we're kind of working our way back down. Now, we are hitting this next kind of the last next support zone, I guess you want to call it. And it's very possible we'll try and rally here. But what's bugging me here more than anything is the new momentum to the upside based on the red DI. That's the sellers. And so a lot of strength. And so what I've said in the past, if you go back and watch my pools of money lesson, we're coming into the next kind of support zone, but the momentum is very strong. So we don't assume that this is going to hold. In fact, based on the momentum, we're gonna assume that it won't hold. And then if it does, we'll see signs of volume and reversal. But right now, I would just be, very careful with this. It's getting extended to the downside. Certainly do some kind of a rally, but I would not get sucked into this yet. We need to see, I think, maybe a even further flush potentially. But you just want to react right now. But there's no trend to play to the upside. It's just a lot of damage done to this pattern. And if we get any kind of a rally, I think it's going to be more of like a short-term counter trend type of a play. Okay, so let's look at the agricultural index because I think it's pretty important. We've had a monster run. Look at the strength. Just looking at the monthly, look at what this has done. Tight pattern, breakout, low ADX breakout, and we've had just a monster huge move. We took out the highs from 2011, and now we've kind of reversed around that in a violent way. I mean, look at this monthly reversal bar. Now, again, we've got about a week left in the month, so it's possible this will come off and form some kind of a tail, but I think if it finishes like this, that's a pretty big negative in the short to intermediate term. We've also broken the 18-week line in a pretty definitive way as well. So I'm leaning towards this being a pretty meaningful correction phase. I don't think this is the end of the bull market for these, but I think this is going to be a pretty healthy pause. Take some time off. Maybe this finds support around 500, 450 or something like that and then bounces around or whatever. But it's certainly enough damage done in the near term that I wouldn't want to be in a big hurry with this to be a buyer or anything like that. So give this time, let this breathe a little bit, and maybe this wants to work its way back towards the 18-month over the course of the next few months. I wanted to point out copper because as I went through the commodities, I thought this was actually pretty important. This break of 25, which had been, decent support over the last 6 to 9 months. Now we've broken that, and I think we want to work our way back down to the next support zone. Clear break of the 18-month now. We've got the 18 and the 40-week rolling over. Momentum is showing up on the daily chart, not really all that strong on the weekly, and that makes sense to me because I do think this is more of a deep or more important correction phase as opposed to being the end of the bull market for this. That would only be one leg in this bull market. I would think we'd get some form, at least some form of a correction here, and then that leads higher down the road. But it's probably going to take some time now. Okay, let's get into the individual stocks that came through. So JP Morgan is really respecting this 18-week line. You see how this keeps failing at the 18-week? It just did it again. I also don't like the trend of the relative performance. And then if we start to look at what MACD is doing, serious overrun to the downside. Yeah, it's getting oversold, but it's almost like a more definitive sell-off out of band behavior, as I talked about in the past. And then look at the strength of the ADX, both the daily chart and the weekly chart. So is this oversold enough to bounce? I mean, absolutely. We're coming into a decent support area, I think. It might have a little bit more room. And yeah, it's probably going to get some kind of a rally. It hasn't rallied back towards the 18-month, which is now rolling over. But I'm concerned that after that, it's going to turn into a pretty big waste of time. That's assuming we make a good low. We won't make a good low until we break the 18-week. So no rush on this. Again, if you want to try and play at short-term time frames for trades, that might be a play. But I'd like to see it get through the 18-week. And if it can do that, then maybe there's some room up towards the 18-month. But just kind of be careful here because you are fighting the trend and you're fighting the relative performance as well. J&J continues to be a strong stock. And if we look at this, so first, let's look at the relative performance. Look at what this is doing on a relative basis. So this means, this black line means this is what this is doing versus the S&P. So it is clearly outperforming the S&P at this point and has been all year. Now, that's obviously a bullish sign. The other bullish sign is that we keep respecting the 18-month line. You see how this keeps pulling back, and this last pullback it found support right at the 18-month. That's a great sign as well. What bugs me about this one is even though the trend is bullish, look at how the ADX has no strength. We don't have any strength on a weekly chart. We don't have any strength on a monthly chart. We don't have any strength on the daily. And well, the daily actually had decent strength here. Maybe if this can get going, we'll see some, again, strength. But if we're looking at a big picture uptrend, you should have by now seen some strength in one of these two time frames. So that concerns me from a standpoint of, am I going to get something dynamic out of this? Probably not. It's almost like it's just a good place to hide right now. It's doing better than the average stock. It's not going down, and that's a really positive thing for that. THC has overrun the 18-month line. So this correction has now clearly broken that 18-month. MACD has overrun as well. So what I've said in the past, when that's the case, can we rally? Absolutely, we can rally back up. But this is going to be a pretty good resistance zone for this if we do get a rally. So really, any type of trades you can do in this are going to be short-term only, in my opinion. And what I don't like about what's going on with this right now is look at the strength of this decline. You see how we made a new low? And as long as this doesn't follow through, if this can rally back up, we've got pretty orderly moving average. You see how these are like parallel? So if we got a little rally here that went a little bit more, this could actually set the stage for another leg to the downside potentially. So we're getting into some better support, but there's still some room. The 40-month moving average is down around 45, and price support is right around that area as well. So I wouldn't be surprised if this rallies up and comes back down one more time just based on the near-term momentum pattern. Now, UNH is another one that I think we have to pay attention to a couple things. The strength of the relative of how this is doing on a relative basis is really impressive. The fact that this keeps respecting the 18-month line, you see how this is the 18-month here overlaid, and it keeps bouncing off that line, I think is a good sign. I mean, these are two really bullish conditions. Now, when we start to look at some other things, I want to look at the weekly ADX in this. What really is disturbing is notice what's happening to the ADX line. You see how this is making lower peaks each time? In this last peak in price, the ADX couldn't even get above 25. Okay, that is a sign from my standpoint is to be on the lookout for a reversal pattern. And usually what I'll do is wait for a break of the trend. So if this fails, see this trend line? This is a really important trend line. It's been touched 3 times. If price comes down through that, based on what I'm seeing here, then we should expect something pretty meaningful to develop, you know, that could bring this down to a pretty significant level. So that's really where the risk is. And I think if we break that level, I think you'll start to see a weakness take place in the relative performance as well. VLO, so I did want to talk about this real quick. The monthly chart of energy has got this big reversal pattern developing in a lot of different energy stocks. So we got to be very careful about that. This is probably some kind of a interim peak that could last a while, maybe 3 to 6 months, just based on the way this is playing out. Now, it kind of depends on how this finishes up the month, but based on the way it looks right now, I would think we're making a pretty important peak in a lot of energy stocks right now. Okay, a Toronto Exchange stock, Brookfield asset, overrunning. So this is overrun the 18-month line, but now it's coming down into some support. And the question was asked, you know, should I look to hedge this? I would look to hedge it, but maybe look to some kind of a rally here because we're coming into some pretty decent support. Maybe this bounces off the 40-month line and rallies back up towards the 18-month. And at that point, if the rally isn't good, it doesn't have a lot of strength to it or volume, then I would put more of a hedge on. It's just because it's dropped so much, it's tough to hedge it right now. The hedging takes place after little rallies. So this would be a good hedge spot. This is a good hedge spot. Now that we've had a leg to the downside, I would be watching for some kind of a rally to form. And then if we get that, then that would be the area where I'd look to do it. SQM, pretty impressive what this is doing. It's a chemical stock, specialty chemical. The pullback has been pretty sharp. Not as sharp as a lot of the other chemicals though. So I am pretty impressed with what's going on. Now, because of the way this kind of made it move up and then came back pretty sharply, you know, I'm watching the daily chart to see if this can set up. We've got a 0 line reversal potentially. This looks okay. And this looks okay right now, but I don't really have a setup right now. And I wouldn't really want to draw a trend line like that. I think what I'd want to see is have the 18 and the 40 come together, especially based on what's taking place with the rest of the group in the chemical area. I'd like to see this come together a little bit more. And if that takes place, I think this could look pretty interesting if there's no more deterioration from here. BBT. Another impressive stock with a very, very strong trend in place. But look at this. On a weekly chart, look at this big red bar that came down from the peak. That's the biggest red bar we've seen. In fact, it's the biggest red bar going back a couple years that we've had. So definitely some signs of some distribution here. And based on what I'm seeing in energy overall, I think you're going to have to be a lot more nimble in these and at least give these a little bit more time to go through a consolidation pattern, corrective pattern. Make sure this gets all the way back to the 18-week. See if you can get an opposing trend to develop here where the sell signal that fails potentially sets up. And if that happens, then I think I'd be a little bit more interested in this. I would not be playing a short-term play for energy to the long side based on what I've seen. Unless you're going to be really nimble, you'd probably have to be down on an hourly chart to do it. RCMT. So this is a tech stock, computer services. Now, very impressive run, good momentum characteristics. We've got a daily chart that's working its way back to the 0 line, the MACD. You see that? And notice also that the ADX is dropping down below 0. This is a stock that I would definitely have on my watch list, but what I'm looking for is this pattern where the sell signal develops, where we get price below the 18 and the 18 is below the 40. That tells me that we have corrected enough on this time frame. because right now we're in a pullback mode. So you look at it this way. On the way up, you had nice confirmation and momentum based on the MACD and ADX, and now we're looking for the pullback phase. So far, the pullback phase looks good because the MACD and the ADX don't look all that strong to the downside. What's missing is a real setup where the 18 gets at least to the 40 and preferably below, and then we know that we've worked off the overbought condition on this time frame. So that's what I'd be waiting for on that, something to keep an eye on. Did want to finish up with this Exxon chart. So notice this big reversal bar on the monthly. You see this reversal that's taking place, and the volume's not that bad, but we're coming into a pretty big zone at 100. I think this wants to work its way down a little bit lower, so you just need to be aware of that. I think these stocks want to take a breather for now. They might get some kind of an interim rally, but then after that, you want to look to kind of stay away for now. Thanks for watching. If you have a stock you'd like analyzed on the show, go ahead and send it to stocktalk@stockcharts.com. My contact information is listed if you have an interest in reaching out. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.